And welcome back. I hope you guys are having an awesome day. I have a big update for you guys regarding foreclosures as well as mortgage delinquencies in the US. This is based on two reports that I post on a monthly basis on the channel from CoreLogic as well as Black Knight. So let's go ahead and dive right in, and I'll share a CoreLogic's report, then I'll share Black Knight's report here. So according to CoreLogic, which by the way, this is called their CoreLogic Loan Performance Insights Reports, in regards to mortgage loan delinquencies and also foreclosures. This is published on a monthly basis, and they go over national, statewide, as well as metro level stats regarding mortgage delinquencies in the US. For the nation as a whole, delinquency rates decreased by 0.7 percentage points compared to 1 year ago. So 1 year ago, the rate was at 3.6%. Now it's 2.9%, meaning approximately 2.9% of all mortgages out there are actually delinquent on their payments here. 2.9% is a national rate as of November here. And according to the principal economist for CoreLogic, Molly Boesel, most homeowners are well positioned to weather a shallow recession. More than a decade of home price increases have given homeowners record amounts of equity. You think about, kind of take a step back and think about this. This is pretty wild because home prices have been more or less increasing ever since around 2011, 2012, up until we hit 2022. So we had more or less about 10 years of home prices increasing nationwide here. And it says here, this should protect them from foreclosure should they fall behind on their housing payment. A couple of things that I do want to mention regarding their statement here, that most homeowners are well positioned to weather out the storm per se, is that for people who bought houses in 2021 and really prior to that, most homeowners have equity in their houses. I will say though that for the people who bought houses in the second half of 2022 using an FHA loan, which requires only 3.5% down, or a VA loan with it, which basically has a 0% down payment, or actually does have a 0% down payment, those are the people that are going to be most impacted by home prices decreasing because they have not a lot of equity, or their down payment was very low compared to a conventional loan, for example. But this is not going to be a repeat of 2008. Back in 2008, we had ninja loans, which more or less means that people, as long as you can breathe into a mirror, and if there was fog on the mirror, you get approved for a loan. I'm kind of exaggerating here, but back in 2008, the lending standards were very, very loose, whereas right now they're more or less tight. The average credit score back in 2008-ish was around 650, and now it's around 720. So people have a lot more of a bigger down payments, and obviously they have a higher credit score, and obviously it's more harder to get a loan approved right now compared to 2005 to 2008. In any case, going back to CoreLogic's report right here, they also go over the states here that have higher rates than the national rate at 2.9%. So for example, in Mississippi, the overall delinquency rate, again, only mortgages, for November was 5.5%, much higher than a 2.9% on a national level here. Louisiana at 5.4%. Look at this big decrease though. It decreased by 1.9 percentage points compared to November of 2021, even though the rate here is higher compared to the national average. West Virginia at 4.3%, and New York, Alabama, and Oklahoma around 4%. So again, on a national level, this November, 2.9% of mortgages were delinquent, which means they're at least 30 days or more past due on their mortgage. And according to CoreLogic, overall mortgage delinquency as well as foreclosure rates remain near all-time record lows in November at 2.9% and 0.3% respectively. However, though, while national mortgage delinquencies decreased for the 20th consecutive month on an annual basis this November, I should say November 2022, 18 U.S. metro areas saw a slight increase in late payments. So in December, there was 18 U.S. metros that saw a slight increase in late payments. That's up from 6 in October, the previous month, and 1 in September. Despite that uptick and slowing home price growth in recent months, most homeowners are in good shape due to healthy amounts of equity. I actually really hate this phrase right here, slowing home price growth in recent months. Why can't we just say home price decreases and not a slowing of home price growth? A slowing of home price growth assumes that home prices are still increasing, but what they're really referring to here is a slowdown in home price growth on a year-over-year basis here. But call it as it is, right? Decreases in home prices ever since more or less June of last year. In any case, they actually provide the rates by state as well. It says overall delinquencies, which of course is defined as 30 days or more past due on your mortgage, which also includes people in foreclosure here. In November, all states logged year-over-year decreases in their overall delinquency rates. The states and districts with the largest decreases were Louisiana, down by 1.9 percentage points, Alaska down by 1.6 percentage points, and DC and Hawaii both down 1.3 percentage points compared to November 2021. Something I found to be very interesting when looking at this chart right here is that even though every single state logged year-over-year decreases in their overall rates, we're not seeing big decreases compared to 1 year ago. So anything in red would be at least 2% or more below last year's levels. There's actually not a single state that actually posted that. The only big decreases were in the range of 1 to 2 percentage points compared to 1 year ago. And again, that was in Alaska, Hawaii, Louisiana, New York, as well as DC, for example. CoreLogic also shares the number of metro areas in the US in which serious delinquency rates actually increase. And they say here there's only one metro area in the US where serious delinquency rate actually increased. Which there's only one. I really wish they would just tell us what it is. Instead, they provide this map here, which is nearly impossible to read. So there's only one metro area in the entire US in which their serious delinquency rate actually increased. And this is really hard to read here. So we actually have to look for bright green, which more or less, it looks like more or less close to Scranton, Pennsylvania. Let me just zoom in here real quick, which would be more or less right here. I believe that's very close to Scranton, Pennsylvania. But again, there's only one metro area where actually posted an increase. Why can't they just tell us rather than just sharing this chart right here, or this map right here, which is very hard to read. Moving on though, there's only one metro that saw an increase in the rate. About 383 metro areas actually posted a decrease in their serious delinquency rate. And speaking of serious delinquency rates, which by the way, CoreLogic defines that at least 90 days or more past due. So people who are at least 90 days or more past due on their mortgage payment. So number one in the state here with the highest rate at 2.3% this November was Louisiana. That was followed by Mississippi, New York, Oklahoma, Alabama, DC, Illinois, Maryland, West Virginia, as well as Arkansas. Okay, changing gears slightly here, let's talk about a new report from Black Knight that was actually just posted last week as well. And this is actually data for December, whereas CoreLogic was for November. So I hope you guys are still watching today's video. Of course, if you are, please hit the like button, right? So this was posted on January 25th. The national delinquency rate was at 3.08% this December, and that's 9% below December 2021's level. So overall in the US, the national delinquency rate, again for mortgages, was at 3.08%. Serious delinquencies, which of course is 90 days or more past due, continue to improve nationally despite an 8,700 rise in Florida due to Hurricane Ian, with 44 other states seeing seriously past due volumes decline in the month. Foreclosure starts increased by 15% in December to 26,900, the third consecutive increase, but still about 30% below pre-pandemic levels. Obviously, this is the beginning phase of the foreclosure of a home. Those are foreclosure starts. But for the amount of houses that are actually in foreclosure, though, that's active foreclosure inventory, that rose by 2.3% in December, though volumes remained subdued throughout 2022 after, of course, record lows we saw back in 2021 due to widespread moratoriums and, of course, forbearance protections. So overall in the US, the percentage of loans at least 30 days or more past due was at 3.08%. That's actually a 2.3 percentage point increase compared to 1 month ago, but down 8.89% compared to 1 year ago. And again, for December, there's approximately 27,000 foreclosure starts, and that's an increase of 15% on a month-to-month basis and a giant increase of 556% compared to 1 year ago. Obviously, this number right here is very, very high due to the widespread moratoriums that we had in place back in 2021 and obviously for the first half of 2022 as well. So right now in the US, there's approximately 1,653,000 properties in the US that are at least 30 days or more past due, but not yet in foreclosure. That's actually a decrease of 146,000 compared to 1 year ago, but an increase of 41,000 on a month-to-month basis. In contrast though, for the number of properties at least 90 days or more past due, that's a decrease of 401,000 compared to 12 months ago at 545,000 at the end of December last year. When we look at the number of properties in foreclosure or they're at least 30 days or more past due, that represents approximately 1.85 million properties in the US. That's a decrease of 77,000 compared to 1 year ago. CoreLogic also posted the top 5 states that have the highest rates of delinquencies in the US. Mississippi actually led the nation at 6.87%. That was followed by Louisiana at 6.33%. Then Oklahoma at 5.2% more or less. West Virginia just less than 5%. As well as Alabama at 4.91%. And when looking at this, these numbers right here are much lower than the peaks we saw back in 2005 and 2010 when the rates were well above 10%. Also, the rates we saw back last December are not too much higher than the record lows that we saw right here. As you can see, much of these were posted in May of 2022. So these are the states that had the highest rates of delinquencies in the US. In contrast though, let's look at the states they actually have the lowest rates here. So Washington led the nation at 1.69%. That was followed by Idaho at 1.89%, California at 1.9%, Colorado just less than 2%, and Oregon at 2.10%. And just like my previous slide, these rates right here for delinquency rates are not too much higher than the all-time record lows that was set in around 1.5% to around 1.77%. Black Knight also posted the top 5 states that have the highest rates of mortgages at least 90 days or more past due. So leading the nation was Mississippi at 2.3%. That was followed by Louisiana at 1.9%, Arkansas at 1.59%, Alabama at 1.57%, and Maryland at 1.45%. Also, when looking at these figures right here for December, especially for Mississippi and Louisiana at around 2% of all mortgages at least 90 days or more past due, this is much lower than the peak back in December 2005. Where in Mississippi in December 2005, the rate was at 10.18%. Louisiana was at 13.30%. It's important to note here that December 2005 is actually just after Hurricane Katrina hit the South back in August 2005. That's why these numbers right here were in the peak in December 2005 due to Hurricane Katrina. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I really appreciate that. And of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.